Hi, this is Randy Finney with Right Side of the Chart, and this is a midday slash late morning update for Tuesday, August 2019. Posted quite a few updates on the front page, and remember, come in if you get the email notifications as a member. You will some of the charts that are attached. If you see two or more charts together, that's usually gallery format, and those don't always show because I can attach a string of up to 10 or an unlimited amount. Usually don't do that many, and so the system doesn't put those in there because sometimes it would be too big to fit in the email. So I always encourage you to check the website. There's a link. Any post you get by email, click on the title, and it'll take you to the site. And the other thing too is I had a lot of comment sections here. As a matter of fact, let me show you. Let me drag this over here. This is the last one. Yeah, the last update on the front page. And afterwards, after I'll post charts, I'll often add my thoughts, or any notes. There's a lot of questions that'll be thrown out there. So again, I encourage you to come in there, and if it's something you're interested in. If I post a trade idea or analysis on an index or a market you're not trading, no big deal. But all right, so that's that. And here's what I wanted to share. What I said in here, I gave my scenario. We're going to get to that in a second on QQQ. I just wanted to, before I forget, I wanted to open here and lead with the VIX and just kind of highlight some of the moves in recent years. The market, this market is definitely a mature bull market. Nobody's going to argue that. Even the most bullish bulls, it's a matter of whether we're in the eighth, ninth inning of the bull market, or maybe the first inning of the bear market. That's all yet to be seen. Right now it can be debated. We'll only know in hindsight. But I wanted to show you and just highlight, some of the moves in the VIX, and there was a trend line there. I don't know where it went on my chart, but the VIX goes in these periods of low volatility, declining volatility, and then you have the big explosive moves, and it all kind of intertwines. There's a reason for all this. Bulls become complacent, longs become complacent, volatility contracts, shorts give up, and that's where you reach those market peaks. And then from those periods of very low volatility come the explosive moves. The market then wakes up, and that's something I've warned of, especially when you see it in the technicals. You see the divergence, you see a well-watched trend line, you see decline, breadth deterioration, declining volume while the market continues to rise on dangerously low volume. Those are your red flags. So they were pointed out, and then this is what happens, and it's what's happened in the past. Now, what I wanted to show you is back here. Just keep in mind, we reached at that point a period of never ever in history extended, prolonged, and low volatility. The VIX had never gotten that low ever since it first started. This right here, I have a support zone, is the typical low end of the range. In fact, here I'll show you a longer term chart. There you go. This is a 10-year chart right there. So if I put, the lines were already there. They just popped up. So what happened back in 2018 is this huge spike came from this unusually low, dangerously low, complacent period of extreme low volatility. And then you had that huge move. So let's go back to that daily chart. I'm just trying to put things in perspective. And it all ties into what's going on in the broad market, of course, because the VIX is certainly related to the stock market. So you had, again, an above average, a very, very large move coming out of there. Even though the drop in the market, it was pretty good. We had a pretty nice, leg down there. That was early, the end of January 2018. But since then, you can see we had a downtrend line, positive divergence again, divergent low right here. There's your divergence, and there was your breakout of the VIX. Sometimes the VIX, it gets low, it can stay low for a long time, or sometimes it comes down and hits the bottom of that support zone like it did right here, one and done. Hits the support zone, that was it. Never looked back, and you had this spike. So what I'm trying to do is show you that right now, the spike that we've had up until yesterday, you can see the VIX is down today, but it's more in line with this one. And sometimes you get the one and done. That was a big one. You had another hiccup afterwards, and then another hiccup. This one right here, you had a spike about comparable to the spike we just had. Then the market rallied, so the VIX came down. You can see that. Then there was another leg down in the market. correction. VIX is going to go up when the stock market goes down for the most part. And then finally, before all was said and done, that was the back here was the December 24th lows in 2018. And so that ended that correction. And then, as we all know, we had a strong rally this year. We had a correction back here. That was the last correction, and then this one. So now where we go from here, look, I'm going to say this. I think there's more upside in the VIX. It could start today. The bounce in the market may be over. That's what I want to get to right now. We hit the bottom of my support zone, my bounce target zone, and that's what I said in the on the comment section below that last front page post, that hey, I think we're probably going to get another leg up, but we might not. And so the best way to do it, well, let's dive into the charts, and I'll just show you there. Let's go. I'm going to focus right now on QQQ and try to keep this video short. SPY is important. I'll touch on that in a minute if this video doesn't go too long. So from the daily chart, daily perspective, here we have, again, everything that was covered in last night's video. Here's the uptrend line off the lows from the 24th. We sliced through it, but on a momentum fueled overshoot, and closed a little bit below it, and now we're back above it. So I wanted to point this out. This is, we'll call that 182. It says 181.98. Let's just call that 182. Pretty decent level right there. A lot of reactions off there. And so QQQ is now above both the trend line and the 182 support level. So as long as it remains above there, it's near-term bullish. Now make no mistakes about it. I still think we go lower. This is a lot of technical damage. Corrections don't usually end like this. One down and then where you go like this. That's rare. It's possible, but very rare. As I said before, usually you have at least a 3 ABC corrective wave during a correction. And so you could look for a kickback rally. Now, if it comes from here, if that was wave A and we get a B here, then we would look to go lower. But this could be just a little hiccup on the way down, and we may not have our first bounce to, let's say, all the way down here. This is pretty solid support down here around 170 or so on QQQ. So I want to just say this. I showed you some levels to watch. I showed you what I think will happen. I'm going to go over that right now, kind of near term. I'm getting a little granular here in the charts, so I'm zooming in on the intraday charts, and trying to game or call a counter trend, what I call a micro bounce within a larger trend, can be very difficult. But either way, it's worth doing a video. So I just want to point this out, that we're above support. So what would be bad or bearish or good for, if you're shorting or adding back shorts on this bounce? Well, first would be a break below today's lows, even though there's the big one is yesterday's lows. That will take us back below the 200-day, and it'll take us back below yesterday's lows. That would be quite bearish. But for today, look at the bottom of today's candles. Maybe we'll get to the 1-minute chart in a second, because that'll take us back below the trend line right here and the 182 support. So now let's look at what I think happens. What I'm leaning towards is this was the bounce target zone. I had a range here added on the charts. Let me pull that up. Okay, this is the last post. So this was the first chart posted this morning. Arrow breaks are levels, those are resistance levels where a reaction is likely. And so what this is saying, and can't draw all the combinations and permutations of what how this can play out, but it's either it says pretty much, okay, the bottom of that gap, as I mentioned, that's probably those are the most obvious levels to all. Whether you're an experienced trader or you just started, you've probably learned about gaps and the significance of gaps. They're very technically significant. For example, here's a gap right here. And so you gapped up, and then you had a gap there, and the top of the gap is support. And you can see we tested it, tried to enter it there, and then backfilled it. And the bottom of the gap is also support. So there was a backfill of the gap. Most gaps are, especially during the trend, they're backfilled at some point, and then you continued on. And then the top of the gap was still support, and it was that same, not by coincidence, not random, it's right there. That was about where we stopped the other day. So it was still acting as support, this gap all the way from here, and it was also these two reaction highs. So you can see there's a lot of reactions along the way, including the gaps, and so that was a big level. Now we gap below it. So therefore, This is a very technically significant gap. That's what I'm trying to say, because it's not just a random gap without any reactions to the left of it. The more reactions you have in the past, the more likely traders are going to see that and then trade off it. So that's what I had, come up here and have a reaction on the initial tag. And again, this could be, so far that's where the market has reversed. It hit that almost to the button and has reversed. And that may prove to be it. However, I'm favoring it for the reasons I said in that post. You can see there's the rejection right there. This is the updated chart I posted. That was right when we hit the bottom of the gap there. You can see the impulsive rejection in QQQ. But what I said I think will happen, and it doesn't mean it will, is that I think that's too easy. Too easy for those that didn't short, that missed out on this and said, darn, that was a great shorting op. I should have shorted the back test or the breakdowns when tech broke down in QQQ, but I did not want to get in. And so I think the bottom of that gap is a very obvious place, but a little too obvious in my opinion. Maybe that'll prove to be the case, because if enough people think it's obvious and enough people short it, in enough longs that are trapped in this move sell, then that's the supply demand takes over. You have more sellers that overwhelm the buyers, and that's going to be it. However, what I'm leaning towards right now, and again, this could change by the time the video is over, and it'll change if we just start dumping and we take out those levels I just showed you, the 182, or was it 282? 182, the trend line, everything else. We take them out with conviction. How do we take them out? Then we limp back. Then that could all change. But here, let's go back to this 60-minute chart. So what I'm leaning towards here is we already had the rejection, as you can see. Here's that's where we closed yesterday. There's the test of that gap right there, and the impulsive rejection so far. So I have very little doubt, actually no doubt, that some traders, it's just a bit. Question is how many shorted right there. Longs that were trapped probably use that to exit as well. So if that is the case, or most likely is, if the markets can now push up, if we can get another thrust up today, and then enter the gap, anybody who shorted there, this is TA 101. If you shorted the gap, you should have a stop somewhat above it. That's a logical place to put a stop. So let's just assume there's a lot of stops placed a little bit above today's highs in QQQ, because traders who shorted there, well, they'll go underwater, number one, if we enter the gap. And gaps, once entered, are quite often backfilled. Not always, but quite often. And that's a big old gap. So therefore, that's what I'm looking at. If we can pop that today's highs, then we'll pop a lot of stops, and then at that point, when you pop a stop on a short trade, that means that the short position is bought. You buy to cover to close out a short position. So that buying then leads to more buying, causes prices to go up. And the other thing too is SPY hasn't yet hit its target, the bottom of the gap. In fact, it's well below the bottom of the gap right now. So I think what will happen, if we get another thrust up and QQQ pops and gets into the gap, you'll see a little run up, and that will coincide at that point with SPY rallying. But then at some point, SPY is going to hit the gap, and then you have this different subset of traders. Some people like to trade the SPY in ES. Others, like me, prefer the NQ and the NASDAQ 100 or small caps, because you get more bang for your buck. So that's one scenario. Now, at the end of it all, let me just say this. So going back to this morning's post, let me grab that for you. Okay, going back to this post, the first one I put up this morning with the bounce targets. I thought I had that ranged in there. I'll draw it for you. This is my bounce target range. We've already hit the bottom of my bounce target range on the bottom of that gap on QQQ. And I always say this, when trading, it's the first of, if I'm looking to, for a bounce to end, let's say, on a bounce back to like in this case, potentially this would be the earliest or, lowest, most bounce point. And I had that on QQQ, the bottom of the gap, and then I also had it on SPY, the bottom of the gap. So QQQ has already hit it, and that's all that matters. It's the first up, because if enough sellers step in when the QQQ hits, which they already have, they've already reversed it there, that may be it. So if they both would hit at the same time, great, all the better. But if you want to give the benefit of the doubt, you say, well, it's the first of the two to hit. Just like on the flip side, if I'm waiting for a sell signal, and let's just say both SPY and QQQ are walking up, these uptrend lines like this, and I'm waiting for a break of the uptrend line. If SPY broke down first, but at the same time QQQ fell to its comparable trend line, I wouldn't take that short yet. I wait for the breakdown there. You wait for the first of the two, both of them to break down, because if QQQ reverses, then this breakdown may prove to be a failed breakdown. Likewise, this is in reverse. You're looking for a bounce back to resistance. So in this case, the first of the two could do the trick. Had SPY hit it first, maybe we would have reversed there. We probably would have. I can tell you, if it went the other way this morning and SPY had a first back tested, you would have seen a subset of sellers fire off sell orders on short orders, and longs getting out of both SPY and ES, the S&P 500 futures. And keep in mind, remember, there are different indexes, but they hold a lot of the same stocks, especially those top weighted, market leading FANG stocks. So anyways, so that's it. And like I always say, that's I'm leaning towards that pop above that level, but so far we've hit the minimum bounce target zone in QQQ, and that could be it. That could be all we have here. I think I said yesterday in the video I was looking for, what would I say, about maybe a 2% or so pop, give or take, in the markets. And let's see where we're at so far. I want to go to QQQ. Well, we faded some of the days, some of the pop so far. There was that back test I showed you yesterday. Remember before the close, we closed right on back tested, and then boom, popped up. So all that happened in the overnight. Here's support, by the way, on this QQQ 1 minute chart. But what I wanted to do is just see how much we were up at the highs. Zoom in here. That dotted yellow line, that's yesterday's close. If I can get my crosshairs right on it, close enough there. And so we had about a 1.5% pop so far in QQQ. And again, this rejection, there you can see the gap. And I always say this too, this is another takeaway if you're new to trading investing. I say it all the time. There's the gap. Technically, it's at the top of that candle. The high was at 183.51, and we reversed, I believe, a little shy of it. Yeah, 183.46. I always say this. If you are targeting, if all eyes are looking at that, you don't want to try to squeeze out every last penny, because most often you'll have the sellers step in early, which they did by a few pennies. But for all intents and purposes, that's a hit. But again, if you were just targeting a pop up to that level, you shouldn't have had your sell limit orders on your long set at exactly 183.46. You should have had it a little bit below, and there's a good lesson why, especially when it's a level that a lot of traders were obviously watching to short today. So far that's where we reversed, and we're still positive for the day. Selling's getting a little impulsive right now. You can look here, but we're coming up on the bottom of, now we have another gap to look at here. So this is all stuff I watch. Technically the gap is right there at yesterday's close on that, that dotted line, but I see two reaction points here that should probably contain this pullback, I think. So look at it, and again, we're getting a little granular here, and the markets move fast. I'll try to get this video out as quick as possible, but by the time you read it, we'll either have taken out this level or not. But I think this is where I think it's a nice level, and I may even add some longs back here right now, about 180, 116. You can see some reactions there. A full backfill of this gap would also be too obvious for those looking to buy it. It may happen. We did almost a perfect backfill there. And then SPY, let me look at that and just see what aligns on that. There's the yesterday's close, that yellow line, and I could put a minor price support level here. And I can tell you, this is what a lot of traders are watching when the markets get in these high volatility meltdown modes. Fundamentals are briefly thrown out the door, and traders flock to technical analysis. It seems to work very well in these instances. You'll notice that levels like today's gap, for example, the reversal And QQQ yesterday, as I told you before, the right before QQQ hit the 200-day in the trading room, I said it was coming up on that. That's a level a lot of buy programs will step in, and individuals will step in and buy a pullback, the initial pullback to the 200-day EMA. All right, let me wrap it up and get it out to you guys. And remember, if this is it, if the bounce to the bottom of the support zone is all we get, I'm going to say this and end the video here. That is even more bearish. In other words, if I have an expected bounce zone, in this case, in a correction, and my expected bounce zone is this, and I really don't know exactly where we're going to reverse, and you reverse at the earliest, the shallowest part of that bounce target zone, and then the downtrend continues. That speaks to the supply demand dynamics in the market. It just tells me there's very few buyers, that the sellers are greatly overwhelming the buyers right now, stepping in at the earliest, most tiny little, relatively tiny. We didn't even retrace. You can see Fibonacci retracement levels right here on the left of the chart: 38.2, 50, 61.8. We didn't even hit the 38.2. In fact, I think I covered some fibs in yesterday's video. I might have put on, you can add, there's a 23.6. That's the lowest fib on this chart. That's what we hit today. I usually don't even put the 23.6 up because it's such a weak retracement. But here, you can see, look again to the left of the chart, 23.6. It's a key Fibonacci. It's the minimum one on my thing. And that's all we've had. So that is a very weak, muted bounce. And what that tells me, if the market just goes like this, this is not even the first leg down. We're still in the first leg down. This wasn't your B and an A, B, C. We've got more to come, and therefore you're looking at a bigger wave pattern, a bigger correction with more downside to come. So let's end it there, and I'll if anything changes, I'll share my thoughts as soon as I see anything in the charts. As of now, like I said, longer term, intermediate term, if you're not an active trader, you're not comfortable with gaming these bounces, I don't see any reason right now why we're not going much lower, and at least down here. If you're just kind of wondering, hey, Randy, before we make new highs, how low are we likely to go? I think it'd be right here, minimum, somewhere in that area. All right, so let's wrap it up here, and I'll get this video out to you guys as soon as possible.